All right, great. Well, we have an exciting panel on stablecoins today. I know stablecoins aren't always the most interesting topic in crypto, but it's quietly become sort of maybe the killer app of crypto, and the usage, the size, the scope is just off the charts with respect to stablecoins. So why don't we just take a moment to introduce ourselves? Graham, we'll start with you.
Thank you, Brent. Hi, I'm Graham Cooke. I've been building products for over 20 years, started my career early days of Google, and bought my first Bitcoin in 2015 and fell down the rabbit hole since then. Experiencing lots of volatility over those years, I've gotten really into stablecoins and stablecoin yields. And after selling my Web2 startup, IPOing and selling a company called Qubit in the retail space, I moved into building a stablecoin, institutional stablecoin management system called Brava. I'm very excited to see you all today.
Morning all. My name's Lux. I would guess you would say by nature I am actually a trader. I spent over 10 years at JP Morgan on the FX trading desk. I spent a couple of years on the buy side running a macro proprietary trading desk. But yeah, in the last few years I've found this niche little area that I work in, which is kind of payments in the digital space. So following stints at trading firms, I was at BCB, which is another payments firm, FalconX briefly, but most recently at OpenPayd. And what we do really is provide universal financial infrastructure. It enables our clients to move and manage money globally. And really, when we get into the discussion today, it's about how we are payment rail agnostic and really how stablecoins now fits into that.
Hi there, Simon. I'm head of digital assets at HAUCK LAMPE. It's a small German private bank. And used to be before at Deutsche Börse Group in the same role, and before that at Commerzbank. I've been doing those kinds of businesses now since 8 years full-time. And we have built an own area for digital assets within our business with 3 different main products that's launching crypto funds. We are the second German licensed crypto custodian. And we also have a so-called security register, which is like issuing securities on public chain.
Hello, I'm Lex. I'm a co-founder of Global Ledger. We do everything MiCA would require you to have in terms of blockchain analytics, so transaction monitoring, AML, investigations. In order to do that, we've collected a vast database of around 60,000 entities. We know all of their wallets and wallets of their clients on the blockchain. Naturally, we work with governments. We are in a lot of public-private partnerships on regulations. So I will try to give you some insight about what's going on there. But also in terms of WASPs, CASPs, crypto exchanges, just in general crypto business, we found out that there are 2 main problems out there, right? Compliance is slow. That's why people probably hate banks as well. And compliance is expensive, and it's becoming more expensive with more regulators. So this is the 2 problems that we're trying to solve. Just taking off the manual work, taking off the 1,000 alerts every day for compliance officers. That's the main job our product does.
Excellent, thank you. So, Graham, I want to start with you. In addition to the stablecoin management platform, which if any of us have stablecoins, we can come to Brava Labs and earn a yield. So I want to get into that. But before we do, you're also an author of a history of Web3 and where we've come from. So I just wanted to give you a moment to kind of maybe set the high-level stage of where we're at right now with Web3.
Sure, thanks. After selling my company, I was sort of handing over the keys, the business, and I thought about writing a book, and I'd always wanted to write a book. So I wrote a book called Web3, The End of Business as Usual. There's some copies out there. It's the yellow book. If you see it, grab a copy. But the book is all about where has the internet come from? Why did this internet money emerge? Why is AI where it is today? And it goes back to the history of technology. And really it looks at sort of what are the trigger events, what caused the actual real change in the sort of technology adoption. And so Web 1 in the 90s was all about the early protocols, internet protocols, secure socket layer. It was all about, very much early adopters getting online. Who was online in the 90s internet? out of interest? Okay, got a few. And what it took for the 90s internet to take off was HTML. That was the thing that accelerated it, made it adoptable, made people understand what this technology could be. And that creates the mass adoption phase. And that was a protocol era leading to a sort of simple UX change that leads to mass adoption. Everything blows up, the whole thing resets, we enter Web 2. Web 2 era was all about the emergence of applications. And applications were going to remove the complexity of the underlying protocols, the underlying internet, like internet protocol. You don't need to know HTML, you don't need to know internet protocol. And it was the iPhone that drove the mass adoption era of the applications. And then that's sort of where we are today. That's how most people use the internet today. Web 2, application, or SaaS, and they don't think about the underlying system. And so along comes Web 3, it's a protocol era, and we have things like Bitcoin, Ethereum, and Solana. These are very much protocols. These are analogous to Internet Protocol, SSL, HTTP. They're analogous to those types of technologies. Therefore, they're hard to adopt. They're hard for people to understand, how do I use this? So they drive predominantly early adopter use cases. And then along comes various different applications like HTML that help people adopt it. And I think stablecoins actually present a similar analogy to an HTML of Web3. People understand currency and dollars and unit of account. And so I think stablecoins are, in effect, like an HTML of Web3, and will actually, most people, not the early adopters, not the finance industry, but most people will actually experience blockchain and crypto through stablecoins going forward. And we're actually also really very much getting into the early phases of Web 4 now, and I talk about this in my book. And the early phases of Web 4 are AI. And that's going to be an AI application layer on top of a Web 3 data and information system, a blockchain information system. And it kind of goes this sort of in 180-degree inversion. So it starts protocol mainly, that was 90s, Web 1. Then it goes app, mainly in the 2000s to today. Then it goes back to protocol, Bitcoin, Solana, Ethereum. Then it goes back to app, and it sort of oscillates between those two different places.
Yeah, fantastic. Lux, so let's see. So stable coins. I mean, so I manage a fund of funds, and we in the United States, and we've had to onboard. We've probably been through like 5 or 6 different bank accounts at this point, and we had an interesting conversation offline about how difficult it is to get access to regular banking accounts as a digital asset business. And ironically, it sort of catalyzed a very quick adoption of stablecoins. So perhaps you could speak a little bit to this. I know you're in the banking sector. Would love to hear some of your thoughts.
Yeah, I mean, look, I think being a trader by nature, I completely understand the proliferation of why stablecoin started, right? You had Bitfinex at the beginning, you had sort of exchanges like Poloniex, and they were looking for the arbitrage opportunity, and instead of moving it dollar fiat over bank accounts that were doing SWIFT, Bitfinex and Paolo had this great idea, let's start Tether. And I think that still is the major use case. But I think you've seen a shift in the last 2 years. And there's probably a few things that have happened at the same time. One was, as we know, the kind of mini banking crisis, Silvergate signature. That immediately put people on edge because they didn't really trust the dollar fiat rails, especially in the US anymore. But the second thing, if you look at the use case of stablecoins, it really exploded kind of that COVID era, right? 2020, 2021, as people were moving dollars or USDT on exchanges. But the use case of stablecoins was positively correlated to the spot price of BTC and Ethereum. That's actually kind of decoupled in the last couple of years. And the reason is these other use cases are now coming. So working at OpenPayd, where, as I said, we are an EMI, but our whole ethos is we are there to help our clients move money from point A to point B all across the world. Now, that could be using SWIFT, it could be using FPS in the UK, it could be using FedWire, anything. But ultimately, we are payment rail agnostic. And this is where the use of stablecoins is now really taking over, in my mind. Again, it's still not the biggest use case, it's still around trading. But I think more and more what you're going to see is the use of blockchain and stablecoins for stuff, especially like cross-border payments. There are, especially in the emerging markets, they are very underbanked. They don't have access to dollar rails. And suddenly the emergence of especially dollar-backed stablecoins become really a massive use case for them. So what we're seeing is a shift in people wanting to use blockchain and stablecoins as a transfer of value. And don't get me wrong, I could sit here and talk for days about what else they use it for. But really from the way that we're trying to utilize it is if we need to send money from a user in Europe and wants to make a payment in Japan, you know, you're looking at a T+2 settlement realistically, T1 at best. Whereas you can on-ramp into a stablecoin, send the stablecoin across, and then partner with someone locally to then do the off-ramp and do a local payout. You could do that in about an hour.
Yeah,
and that's huge.
So you integrate with SWIFT, ACH, all these legacy money transmission rails. Is stablecoins kind of augmenting that? Is it starting to replace it?
I think we'd all love to get to a place where when we all started working in crypto or looked at crypto, it was going to be the replacement of fiat. I don't think that's necessarily what it's going to go to. I think crypto is underpinned by the need for fiat in some point. I think what you're doing is if you look at the end-to-end process, you can now say 70% of it can be done on the blockchain. You know, the initial on-ramp, it is still a movement from fiat to stablecoin. There's no way of getting around that at the moment. And the last leg is generally the off-ramp, right? And so in those two cases, you do need actual fiat, you know, payment rails, whether it's SWIFT, whether it's, as I said, it could be PIX in Brazil, it could be FPS in the UK, SEPA in Europe. You still need that, but I do think, for example, like the SWIFT element, that can now start being looked at being removed because, again, especially when a lot of clients in the space that we operate in are big market makers, liquidity providers, exchanges, waiting 2 days for your money is a hell of a long time and can put a lot of strain on your operational balance sheet.
Yeah, definitely. So Simon, you work for one of the largest, oldest banks in the world. So perhaps you could give us a view from the inside of how you're thinking about integrating with stablecoins.
Yeah, thank you. Quite interesting thoughts also in discussion up front. I think I would maybe quickly catch up on that as well. I think in general right now, to come to the question from our side, what we at first need a stablecoin for is the settlement of securities that we issue on public chain. So we issued securities on public chain, and of course we say to everybody, look guys, it's going to be really, really fast. Yeah, the truth is, if you don't got the payment rails on the same level as the security itself, it doesn't work. So I think it's a pretty good example for other use cases as well. Because if you tell about disrupting other stuff and using blockchain technology for industrial cases, but you don't have the payment side on the same rails, it doesn't work, or it doesn't provide the benefits. And the reason is simply that every economical action that we do in our society is also based on payment. We don't have economical transactions without payment. So integrating payment into economical systems and transactions is core to the thrive and growth of our economy in total. And that is what the stablecoin actually as a society, or for the society, provides value and will push our society forward. So it has a great economical and social impact on our lives if we can integrate the payments in our economical actions. However, and that is, I think, quite interesting, and you mentioned that, we saw that with economical and especially financial innovations came crisis as well. And what I see is that we see the power of something like a Tether. And let's say some years ago, I mean, Tether launched 2014, still very early, I think got the first billion 2016 or something. So there you could say still a small animal. Now Tether is making as much profit as fucking Goldman. Maybe you saw this week. That's economically relevant. It's not a play toy anymore. And it's 70 people. What if 70 people fuck up? That has become a real issue for our economy. And so if we want to really build stable coins, stable doesn't only mean that you do a payment in the ratio of 1-to-1 to an existing currency. Stable means that you can use it. And we saw it via Silvergate indeed. Where was the issue? Not in Silvergate itself, but with the associated companies. And so reserve management of stablecoin is not a game anymore. It's serious economic shit. Yeah? And if the stablecoin market is still growing, we will really have social and economically negative impacts if we don't have well-made and really stable stablecoins. So I'm happy, even though some people complain a lot in the market, that there's no regulation for stablecoins in Europe. And the reason is, as existing EMIs as well, you need to fulfill some obligations. And I would say personally, if you do as much profit as Goldman Sachs, I want you to be regulated. And it's a scandal that Tether is not regulated.
Yeah, I think you teed it up very nicely for Lex here. So we've seen this explosion, 200 billion plus in stables now in circulation, settling on par with MasterCard and Visa. We've had some high-profile blow-ups in Luna and other stable coins. I'm a former auditor, and I don't think I think there's some audit report floating around about Tether in reserves, but so you're at the table with the regulators and having conversations with them to take us inside the mind of the regulators and how they're approaching getting a grasp of this space.
Yeah, I mean, it's interesting that even in your question, you can feel a little bit of anxiety about that, and I feel a lot of anxiety in terms of when you talk to clients or just people that hold crypto, when they think about MiCA and compliant stablecoins, what's going to happen? Am I going to jail because I hold non-compliant stablecoin? Or am I lose it? Will I be able ever to trade it? Will it be frozen on my account? So the good news is no one is taking your coins away. That's the good news. And no one will delete it on the European wallets. Like there's no way to tell that. Another thing is, I mean, the bad news is the non-compliant stablecoins should be delisted from European exchanges by actually 3 days ago. So you will not be able to trade stablecoins on an exchange. But even if you do somehow by mistake, maybe you registered with VPN, whatever. Like that's the problem of the exchange now, not yours. Like, so in that sort of scenario, people also, like when they have that anxiety, they feel threatened, so they don't sometimes think about the situation why these regulations are coming in. Like I work with governments, I'm telling you, I tried to find that person and I couldn't do it. Like there's no guy whose job is to think how to sort of regulate, stop innovation from happening, and things like that. There's no such a guy. Like it's all totally different jobs, and they think about how to protect customers. Like the MiCA, if you think about like when it started, it's when Luna and FTX and all these things was starting, and they were thinking like, okay, Luna crashed. What was the problem? Reserves. What we put in the regulation? Reserves. It's like that's as straight as that. Like there's nothing. There's no creativity in that, I can say, So, in general, the regulations are coming. Probably the stablecoins that we have right now, they will be a little bit. We would feel safer and more legal to use them, but some of them they will be not for retail use, not for trade, something like that.
Yeah, definitely. So we have private stablecoins, Tether, USDC Circle, decentralized versions. Then there's also this whole other conversation happening around CBDCs. And our governments, our sovereigns, going to create their own digital currencies. Perhaps we could stay with you, Lex, to just set the stage in terms of where are we at with CBDCs? Are we going to have a digital euro? Maybe even just take a step back and distinguish between retail CBDCs, wholesale CBDCs, and private stable coins.
Okay. So we participated in a few, like a pilot projects of CBDCs around the world, like an expert, like a AML, blockchain analytics experts, and a lot of these pilots, they are just not ready to go. Like it's. And it is a very hard decision for governments to sort of sign up for one single technology for the rest of their life and pay subscription to some certain like a blockchain provider, and what if it's flawed? They have no even ability to check the security right now and things like that. So it's a very hard decision to step in for many governments. Many pilot projects, when you see them in the news, they may not be as ready as it is said. Sometimes it's just, we try the application with you and we write the press release and that's it. If you talk about competition of CBDC and stablecoins, frankly, CBDC is already lost. Like it's, there's no argument about that. Like it's virtually zero cost to move money from Paris to Vietnam right now in stablecoins. Like it's virtually zero cost. Like my colleague can confirm that. Yesterday we talked about that with Zodia Markets guys. So it's virtually zero cost. CBDC in a form the governments developed that like will be highly fractured. Different technologies. You would need to have bridges. All this would have the cost and time constraints. So you would not have as fast, as reliable, as transparent system, and as cheap, in general. So in stablecoins also, like if governments adopt stablecoins, they can get that trade benefits in the economy without really spending any money on that. Like there's no budget point, in the government budget, like spend on the stablecoins development or something like that. But CBDC is usually it's a big project for the government, and the government sort of signs up to pay sort of subscription, either it's internal team or external team to do that. So in terms of especially like international trade, CBDC is lost, no argument. But whom of you bought something with stablecoins, like literally bought in the internet or physically last week? Can you raise your hand? Well, so that's the thing. So in terms of retail markets, it would be very hard time for stablecoins to compete in a system that is sort of locked, that is regulated, where the government can put additional incentives, where the government can directly talk to banks and push that and things like that. So wholesale, lost, retail, they have a pretty good chance.
Excellent. Yeah. So I don't think we saw a single hand go up on that question. But so what are we using stablecoins for? I mean, clearly we're using them in high volumes. Simon, your bank was working with a major corporate to do a debt offering, I believe, denominated in stables. Perhaps you could just share this one very specific use case.
Yeah, sure. So, I mean, a bit like as mentioned before, we had one large bond issuance on-chain, like on Polygon. It's already quite a while ago. With Siemens, it's a large German manufacturer. And back then, for example, we still used like the existing payment rails. So for us, it would be really helpful to have a compliant stablecoin that also a company like Siemens is willing to use. That's I think, very important to settle it. So with this kind of instrument, we could do, of course, then the settlement also quicker, or maturity, or the interest payment or something like that. And I think what is also kind of interesting, of course, is the way looking forward as well, like what use cases we can assume. Right now, good experiment to show it. Yeah, I think stablecoins are primarily being used for crypto trading right now. Yeah, that's the #1 use case by far. And now we see other real-world applications, and that's remittances in countries with unstable, irregular currencies, like Argentina, for example. A friend of mine was traveling through Argentina, and he was literally exchanging USDT against US dollar within like backdoor exchange offices in Argentina. So that's getting really, really interesting already. So we see, if you have asked the question, maybe in Argentina, some hands would be upraised. So that's already good. It's maybe a bit of also a bias based on where we are. And I think what is really interesting, also coming back to the point of integrating the payment into the economical transaction, is what we can do potentially if we manage to integrate, because the current payment world is very, very integrated. I mean, everybody here maybe that went here, or almost everybody that went here, tapped his card, yeah, at the payment of the underground here at the tube. So that is very easy. Yeah, imagine if you could do the same thing with a stablecoin, basically, where you also leverage the payment gateways that are already existing. And I can also give another example, maybe, of what can be done with a stablecoin. I used to work with Commerzbank, and we did already like 5 years ago payments on blockchain, but not on public chain, to be fair as well. And what we used to do back then, for example, is we worked with Daimler, so the large German car manufacturer, and we used basically payments for trucks. And the case was very simple. Currently, trucks are being paid for getting fueled by cards. You have fueling cards. And I was really amazed to see that the fraud rate of fueling cards is 5%. So you have a 5% fraud rate for payment mechanism. I was shocked. I couldn't believe that this was possible anyhow. Why? Very simple. The drivers take the card, fuel their private cars as well, with the same card as for the truck. And so what we did do, we put a wallet onto the steering unit of the truck. The truck has already the infrastructure, it has a steering unit. So if you put the wallet onto the steering unit of the truck, only the truck itself can pay for being fueled. And now comes really amazing stuff if you have it like that. At first, the driver cannot pull out the steering unit and put it on his own car. That's obvious, right? But now go further. How is the fueling being done? You get a stream of fuel against a stream of money. Yeah? So let the money really stream. Let's make it like micropayments, let's say a transaction every 10 seconds. And you just like calculate it in the way that if you go like 10 seconds early and the last piece of stream is lost, I mean, that's only a financial model. You can calculate it in the payments. So a car is being fueled and the car itself pays for it directly in a stream, and you don't have a discrete payment point anymore. Yeah? See how convenient this is and how much problems this solves for only like this tiny piece of payment infrastructure. And even though we are not there yet, I see a lot of applications where we can really change the structure of the economical transaction by integrating stablecoins into the payment mechanisms.
All right, fantastic. Yeah, interesting with stablecoins being able to watch in real time cost or interest accrue, and we'll get to the yield stuff. Lux, I just wanted to kick it back to you. So your background, OTC, trading and settlement is obviously the biggest use of stablecoins. And then, of course, now you're more on the banking side. But perhaps just from an adoption standpoint, you could give us a sense for, where we've started and where we're headed.
Yeah, I mean, if I'm being brutally honest, I think when you think about stablecoin and the use in trading, it is currently just to move a digital dollar stablecoin between exchanges, right? To me, that's great, and it's why Tether's done so well, because let's be honest, if you look at the user base of a Tether versus a Circle, there's definitely a difference in the jurisdiction of their users, right? It's those who are more from the emerging market side who struggle with banking. But what really excites me, and I hope the market goes there, is the FX. You have got there if you look at spot, a $2.5 trillion a day market, of which the majority is euro-dollar. That is really dependent on continuous link settlement working and limits there and SWIFT. And you've got a perfect market for stablecoins to come into and just absolutely take that. I mean, I think it was Zodia and Cumberland did a test trade in an Aussie stablecoin and a US dollar stablecoin, and they were able to trade in the Asia hours and the US hours and have both legs settle on the same day. To do that in FX as a fiat pair is just, you're looking at 2 days, one at best. So for me, when I think about my experience of sort of sitting at JP Morgan and kind of thinking, where do stablecoins really add value, is the adoption of banks really taking it to the next level and thinking, how can we use it in our operations when we're doing like an FX trading desk, like a JP Morgan, a Standard Chartered, etc. I think we're always going to have the use of stablecoins in terms of moving funds from exchanges. I think, Tether has shown that. But where the potential is stablecoins as a market value are probably 1% of the US M2 money supply. From a spot trading basis, they are barely 1%. If stablecoins can start even taking 3, 4, 5% of that's just a huge amount. And for me, that's probably, on a personal level, where the application of stablecoins could get really damn interesting.
Nice. All right, so Graham, this whole area of let's say I'm a fund or an allocator, and I'm sitting on stables, the stablecoin environment, we can pledge these coins to protocols and earn this yield, and so this yield farming concept. So perhaps you could kind of walk us through what is this yield, where does it come from, and how is Brava positioned in this sector?
Yeah, I think. Thank you. I think that first of all, I think that the killer use case, just to sort of like add on to this right now, of stablecoins is as a wealth management tool, and that wealth management is sort of contextual. So you could be wealth management as in sort of uber wealthy in Europe, or you could be wealth preservation in a sort of a developing market, and stablecoins provides that wealth management tool, and the reason it does that is because you can very quickly and rapidly and transparently allocate your capital into a highly diversified set of lending pools. You've got a lot of innovation today in the industry because we're dealing with blockchain, because it's composable. We've got a lot of innovation around what we can do with effectively credit. And so we've got the most simple markets that everybody understands, like AUFHÄUSER and Fluid, where somebody's going and putting up collateral and borrowing against their collateral. And if they can't pay that collateral back, if the prices go down, they get margin called in the smart contract. And that's what we're all used to. That's the thing that's been around for a long time. But then you get markets like Morpho, and Morpho's created sort of elaborate credit markets that you can do more complex things with that capital. And then we have things like, now we're opening up market making. You get Hyperliquid, has an open market making pool now. We've got Athena, which is basically providing the largest delta neutral strategy we've ever seen in crypto. And it's, again, it's somewhat diversified across lots of centralized and decentralized exchanges. We've got bridges that need liquidity. And so we're seeing this sort of rapid innovation in, I've got a product, it needs liquidity. And then you have on the other side of that, I'm looking to preserve my wealth. I don't want to hold I don't want to hold all my net worth in a speculative asset like Bitcoin or Ethereum, but I want to be exposed to the crypto ecosystem. And that's the opportunity to start to allocate your capital through stablecoins into all these different innovative strategies. And I think wealth management is kind of where it starts today. That's where we focused on at Brava. Wealth management, wealth preservation, diversifying across all these things I just talked about, all these different pools. But where I think it goes to is getting into private credit markets where you can actually start to bring the information onto the blockchain, much like the trucks refueling. This is just one of the many hundreds of thousands of use cases of where you bring the need for capital onto the blockchain, you settle it in stablecoins, and you bring the data set about what's happening in that whole process. Real world assets then become one of the largest sort of $10 to $16 trillion ecosystems where you bring data and credit, and it's instant settlement, it's instant information, and ultimately putting on the Web 4 hat, you start to be able to have AI agents actually making decisions on which risk levels you want to take and which credit systems you want to go into and which borrowers are good, who settles quickly. And we enter into this real-time credit market built on blockchain, powered by stablecoins. It has to be stable because these are medium of exchange type of interactions. They're not, you wouldn't want to be using Bitcoin for this because it's too volatile to handle these sort of microcredit scenarios. So I just think this is, as a crypto OG who got into 2015, I think stablecoins is one of the most exciting things. One of the best use cases of blockchain, and I think it's what's going to really sort of transform our global economies with the underlying nature of blockchain, Bitcoin, Ethereum, and Solana underneath it.
Yeah, fantastic. Lex, quickly. So I just wanted to touch on illicit activity as adoption, right? We have trading. Of course, there's gambling and illicit activity now. You're an expert in this. I just want to let you talk about this.
I would say gambling is illicit activity. Why? It's licensed. No. In general, I think it's fascinating that stablecoins follow the same pattern as in a normal economy, the same pattern as on the dark side. Let's say stablecoins are barely used in darknet, like compared to Bitcoin, it's like a tiny, tiny portion. You guys are saying like this, like you know. So Stablecoins are not used in a way, you know, in scams, let's say. I mean, if you hold stablecoins, you probably is like a target for scammers. You know, a lot of us receive these zero USDT transactions. You know, they try to copy the wallet address and stuff like that. So you are the like target for the attack. But as soon as the hacker or scammer gets your money, he immediately swaps it into Ethereum or something, or Tron, because that's the only way for him to hold on to this money. Like Tether, I think, blocked 1.3 billion USDT, and USDC blocked 100 million USDC on these like scammed and hacked wallets. You know, when police calls them, they generally react pretty fast. But what's interesting, like stablecoins, in the same way, they became a go-to for things like sanction evasion. And we recently had like a public partnership meeting today here with the UK regulator, and there is a problem even here, like in Europe as well. So sanction evasion numbers in stablecoins are just crazy, and it's all not because banks here are just, or like exchanges or WASPs, they want to do that sanction evasion thing. Like people are not super happy to know that receive money from Iran or something.
And so working with tools like Global Ledger, are regulators enthusiastic and hopeful that they can uphold sanctions and catch these bad actors?
Yeah, we can sort of give you the number, like how much, sanction money you received, even if other tools didn't show you any. Like, and there will be a proof and everything about that. That's what we can do. And because literally people don't know that, because maybe some other tools don't show, because these sanction actors, they are extremely smart, and they also use some tools on the market, and they sort of learn their ways through the blockchain. They also somehow connected with some cybercrime groups or drug dealing, weapon trading groups and things like that. So they're like, it's a sword and a shield game between us and them, usually to understand their inventions. In that sort of sense.
Fantastic. All right. Well, we could keep going, but the clock is blinking negative time here. So thank you everybody, and that was an interesting discussion. Thank you.